In this video, we are going to talk about how to become a millionaire with stocks. So, before starting the video, please like this video. Do subscribe and turn on the notification to our channel for future updates. Investing in publicly traded firms is often regarded as a sound strategy for building long-term wealth for yourself and future generations of your family members. Nevertheless, considering the volatility of the stock market, how do people make money from stock investments? People strive to become multimillionaires, but only a small percentage of those who do it are successful in their endeavors. The good news is that even the most unskilled investor can make a sound investment decision with minimal risk. Being prosperous in the stock market may appear to be a privilege reserved for Wall Street insiders or extremely wealthy individuals. Investing does not require you to be wealthy or well-versed in order to generate a significant amount of money. Having a strategy, on the other hand, will be necessary. Following these 3 simple steps, you might be on your road to becoming a multimillionaire in no time at all. When it comes to generating money in the stock market, time is your most valuable asset. Investing is a long-term endeavor, and there is no foolproof technique to become wealthy quickly. If you have more time to devote to your business, you may be able to earn more money. If you start late in life, becoming a multimillionaire may prove to be more difficult to achieve. It is, however, more preferable to begin investing now rather than later in order to maximize returns. If you want to make the most money possible, selecting the correct assets is critical. However, the process of purchasing stocks can be complicated. However, while it is possible to make a substantial amount of money by investing in the next great thing, such as a gleaming new startup that promises to revolutionize the world, you will almost always make more money by sticking to slow but consistent investments. To a large number of investors, an S&P 500 index fund is a good investment. These funds track the S&P 500 index, which is comprised of slightly more than 500 stocks belonging to some of the country's largest corporations. During the course of your investing career, the stock market will almost certainly face a dip at some point. Corrections in the stock market are common and healthy, but they may be frightening. The temptation to try to time the market when you are concerned about losing money is strong. This, however, might sometimes have a negative impact on the situation. Because the stock market is so unpredictable, even the most knowledgeable investors are unsure how it will react. Take, for example, the impending stock market meltdown in 2020. Not only was the crash unexpected, but so was the near-instantaneous recovery that followed. Moreover, if you attempt to play the market but wind up buying and selling at inopportune times, you may suffer significant financial losses, making your objective of becoming a multimillionaire much more difficult to achieve. If you get started as soon as possible and build a strategy, it's easier than you think to make money through investing. Gain a thorough understanding of the stock market and maintain your focus. A working knowledge of the stock market, as well as comfort with long-term investment, are required if you want to see your money increase in the stock market. Expecting to become a millionaire overnight as a result of a fortunate stock selection is unrealistic, so don't hold your breath. If you require assistance in getting started, you can consult with a financial counselor. Examples include the Paladin Registry, which pairs investors with fiduciary certified advisors through a matchmaking website. That means they are required to act in your best interest. Maintain your focus on your investment objectives and your composure amid market downturns. Make it possible for the market to handle the hard lifting. Create a budget for your investment. Budgeting your wages is an excellent investment strategy. Investing payments should be included in your monthly budget so that you can keep track of the progress of your portfolio. Try to figure out ways to conserve money so that you can invest more of it back into your business. Cutting back on other expenses, regardless of how much money you've already put aside for retirement, may allow you to increase your savings even further. It is not a terrible idea to engage a professional to assist you in organizing your finances. Facing Wealth is a financial planning firm that matches you with a professional financial planner who will help you manage your assets, savings, and other financial issues. Put your money into index funds. It is a little unreasonable to expect to get wealthy by investing in a single stock or mutual fund. This is one of the reasons why index funds have garnered so much popularity. When you invest in an index fund, you are increasing the diversification of your portfolio. Because you are investing in a diverse variety of companies through a single fund, your investment in each fund is virtually smaller than your overall investment. As a result, each company offers you a reduced wage as a result of this. You will, on the other hand, Suffer a smaller financial loss if some of the enterprises turn out to be duds. If you prefer a buy and hold approach to investing in the stock market and to growing wealth over time, index funds are a good choice. Index funds are less expensive than searching for the one stock that will alter your life forever. Purchase and hold. Using Apple as an example, you can see how investing in and owning stock in a company may be advantageous to your financial situation in the long run. Buy and hold refers to the practice of purchasing stock shares and retaining them for an extended period of time, even when the stock market is in a downward trend. The buy and hold strategy is favored by many of the world's most successful investors. The billionaire investor Warren Buffett stated in 2016, "Millions of dollars are made in investments by investing in and owning good firms for lengthy periods of time." Buy and hold. Alternatively, the buy and hold strategy is the polar opposite of the above. Trading stocks for profit is a method employed by investors who want to make a lot of money in the stock market in a short amount of time. Fundamentally, you borrow stocks and then sell them for cash at the current market price, which is the primary principle. You will, however, be required to refill the inventory you sold as a result of borrowing it. You're also accountable for paying dividends on the shares you've borrowed during the time they've been borrowed. Those who sell short anticipate a substantial decline in the stock price, which will give them the opportunity to repurchase it at a lower price. This means that customers will be able to take the difference with them when they leave the store or restaurant. Because the difference between the two prices can be significant at times, short selling is a viable method of making money in the stock market. Shorting the market necessitates a thorough understanding of the market as well as an educated judgment as to when the stocks will crash. You don't want to take out a long-term loan from them since you'll end up owing a lot of money in dividends if you don't pay them back. Stocks can be purchased and sold through a brokerage business, such as E-Trade, if you are interested in short selling. Do check out the link in the description for great ways to start. So, that's it for today's video. What are your thoughts on our video? Please let us know in comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on the notification to our channel before you go. Do check out the site lifeguidepro.com and see where to fix in. Thank you so much for watching.